Would you like to become a landlord for a shopping mall or an office building for as little as a few $100? It is possible for anyone to actually become one of these through investing in REITs. What's up guys? In this video, I'm going to be talking about investing in what we call real estate investment trusts to actually generate yourself a passive income and also as a long-term investment to build your wealth. We would all love to own lots of real estate and sit back and relax and just collect rent from all of our tenants. Well, this is actually available to anyone who is willing to build an investment portfolio of REITs. Now, I'm not advocating that REITs is all that you invest in, but REITs can actually be a great part of a diversified portfolio of investments. I personally have invested over a number of years in REITs and have built up a portfolio of about $100,000 worth of REIT stocks, which actually bring me in an average of about $500 a month in real passive income. I literally do not have to do a thing to actually get paid these dividends by these REITs every month. And I plan to continue holding these for the long term and growing my holdings and income generated from this investment class. I'm going to show you some fundamental things about REITs so that you can actually decide if they could be a good investment for yourself. So let's go. A real estate investment trust is basically a company that makes investments in income generating real estate. Investors who actually want to access real estate can basically in turn buy shares of a REIT and through that share ownership effectively own the property that is owned by the REIT. So this actually provides investors with exposures to all the different types of properties that the REIT owns that they would otherwise be unable to afford. Not many of us obviously can afford to buy a shopping mall or an office building, but through REITs we can actually own part of one. REITs are not a complex investment asset that you need an investment banker to do for you. It's actually really easy to buy into a REIT, and as they trade on any public stock exchange, so anyone actually has access to buy and sell them. Here are a few broad categories of REITs that you can typically invest in and own different types of properties that you choose. So there are commercial REITs that essentially own office buildings. There are retail REITs that are owning shopping malls, and there are industrial REITs that own warehouses and logistics facilities and data centers sometimes. There are also hospitality REITs that own hotels and service residences. And finally, there are healthcare REITs that own kind of nursing homes and hospitals. So a typical REIT structure works like this. So unit holders are like you or me who buy shares in the REIT on the stock exchange itself. The REIT has a manager who sets and executes the actual strategic direction of the REIT according to its stated investment strategy that you can actually find on their website or their annual reports. A REIT manager typically appoints a property manager to manage the real estate properties of the REIT itself, and the property manager's responsibility is to essentially include renting out the property to achieve the best tenancy mix and also make sure that all the rental income is collected as well. In return, the property manager is paid a property management fee out of the assets of the REIT. These properties are then leased out to tenants. In return, the income flows back to the unit holders, whom are the investors, as income distribution, which are dividends. So in some cases, there is a sponsor who sources the properties that are injected into the initial portfolio of the REIT and actually may continue to provide a pipeline of assets for the REIT as well. So why invest in REITs? Historically, REITs have actually delivered a very competitive total return based on high and steady dividend income and long-term capital appreciation of the stock price itself as well. They have fairly low kind of correlation with other assets like other stocks, and actually this makes them a very excellent portfolio diversifier, which actually helps reduce your overall portfolio risk and it also increases your income returns as well. So REITs do have a lot of benefits in my opinion, which is why I've invested in them. They have a very substantial and sustainable dividend yield, which is one of the most primary reasons any investor invests in REITs, because they are usually required to pay out at least 90% of their income as dividend to their shareholders. The second benefit is that the income is actually secured by long-term leases, right? Because they're commercial leases. So REITs also own physical assets, and these are often long-term lease contracts that are actually tied with their tenants as well. So this actually results in a very secure and stable income stream over a long period of time, and REITs can actually yield, anywhere between sort of 5 to 7% on average. Diversification. So some see REITs as a lot less riskier investment asset because you're not just investing in one investment property, you're investing in a whole pool of properties that the REIT owns, basically. Also affordability, because not every investor can actually afford a direct property investment and fork out such a large deposit. So what REITs actually enable you to do is actually get into and get exposure to large commercial assets in bite-sized chunks, basically. Liquidity. So unlike traditional private real estate ownership, Listed REITs are very liquid assets that can actually be sold very quickly on the stock exchanges to raise cash or take advantage of any other investment opportunities that you do have. Another benefit of investing in REITs is their level of transparency and flexibility. So you can actually access all the information about REIT prices and trade REITs through the trading day as well. REITs also have professional property managers that actually maintain and manage the properties themselves as well. So you don't have to actually worry about managing the tenants and maintaining the property like you would if you actually had to invest in a physical property. So while REITs have traditionally been a relatively stable investment asset, even during the recessions, the current environment is one that is obviously unprecedented with the pandemic and with economies shutting down. So REITs as an investment class have been pretty volatile recently, but I do see that as an opportunity to get in at quite low book values. So I do believe that REITs as an investment class will continue to remain as an attractive passive income option for investors. And I do have no doubt that the big blue chip REITs will definitely survive through this kind of period and also emerge out of this crisis stronger if they manage to acquire cheaper assets as well. So do your own research and don't buy all of your REITs all at once, and you might see some great opportunities at the moment to actually start investing today. So if REITs or just building a better financial future for yourself interests you, then hit that like button and subscribe to my channel to see more videos like this. In future videos, I'll actually share more about the particular things that I considered in building my own REIT portfolio, and also share some of my own personal holdings as I continue to actually learn and work towards becoming financially free. So I'd love to have you guys come on this journey with me. And until next time, see you guys.